Started. All right, so welcome to our National Telehealth Resource Center webinar series. This is our March edition. And just to tell you a little bit more about the National Telehealth Resource Centers, we have 12 regional centers and 2 national centers. We're all grant funded through the Office of Advancement for Telehealth under the Federal Office of Rural Health Policy under HRSA and HHS. So your phone or microphone on your computer has been muted today. We do have the Q&A feature. You can ask questions there. We will be sending out or giving you a link to a post-webinar survey later on at the end of the webinar. And as I mentioned earlier, we are recording the webinar, and here's the link where you can find it. We'll also send out notification once it's been posted to the National TRC YouTube website. So today, we're going to hear from Larry Hansard about considerations for telehealth providers when negotiating malpractice insurance. So this is a rather dry topic maybe, but it's a very important topic. So Larry, I'm going to go ahead and hand it to you.
Thank you. Hopefully everybody can hear me, and welcome. It's really good to be here. Again, I'm Larry Hansard. I am an insurance broker with the firm of Arthur J. Gallagher and Company. And if I can control the slides now, Becky. They're not moving. We're having a little technical difficulty here.
Sorry, just go ahead and click on the screen, and then you should be able to advance the slides.
There we go. Okay, sorry about that, everyone. And welcome. Good to be with everybody. Good morning or good afternoon, depending on where you are around the country. For our friends on the East Coast, I hope you're digging out of the snow and survive that. And hopefully spring is right around the corner for you, as it seems to be here in Dallas, Texas, where I reside in real estate. I find myself traveling around the country and have clients really just everywhere. And I understand that there were about 100 people signed up for this particular webinar, which that's got to be some kind of a record, actually. I don't think in the history of the world 100 people have ever volunteered to sign up to listen to somebody talk about insurance for almost an hour. So that's exciting and a bit daunting. So I'll try to be as entertaining as I possibly can be today and make the topic as fun as possible. And hopefully it'll be informative and valuable to each of you. First, by way of a bit of an introduction as far as exactly what I do, I am an insurance broker. And that means that I'm an intermediary. I work for the clients. I do not work for an insurance carrier. We negotiate with them on behalf of our clients. The way that we work is that we establish a relationship with a client. And then once we have spent time with them and analyzed where their risk and exposures are, then we come up with a mutually agreed upon insurance program. Our job then would be to take those requirements and go into the insurance marketplace on their behalf and then get quotations from the various insurance carriers that might be good fits for that particular risk, that client. Then we make recommendations to them based on the quotes that we receive from the marketplace. So we work with all the different insurance carriers, and then once the client has made their selections based on not only pricing, which is always important, but also terms and conditions. We're going to talk a lot about those today because that's really where the meat is, so to speak. But then we actually, after the client makes their decisions, we'll place the insurance as appropriate and get the program accepted. Our job does not stop then, though, as a lot of people think it might. We spend a lot of time with our clients on such issues as risk mitigation. We want to help them to control losses as much as possible, because that ends up costing them money in the long run. So we want to help them be a better practitioner, a safer environment for their employees, et cetera. And then in the event that they do have claims, we actually get involved in those. We have a claim advocacy department. So as much as we'd like to think every insurance carrier is going to behave themselves and pay claims as you would hope that they would, that's not always the case. And so we get in and negotiate on behalf of our clients and get heavy-handed when necessary with the carriers in the claim advocacy area. And then we spend a lot of time just in the advisory role, day in and day out. Our phone rings a lot. We get a constant flow of emails as far as coverage interpretation. Is our policy covers for this? Is it covers for that? We're thinking about doing something new. Are we okay there? We do a lot of contract reviews for our clients. You all in the telemedicine space are doing a lot of contracts right now. This is a big growing segment, and so it's very, very common for our clients to seek our help in reviewing a contract that they might have and becoming a telemedicine provider, for example, to a large healthcare system, or any kind of other arrangement, maybe providing services to an employer. And all of these contracts will have insurance requirements. And candidly, not all of them make sense. A lot of times these are very generic and frankly may be the same contract that they use for all kinds of different vendors, including construction companies, janitorial services, whatever. And so many of the things they may have in their contracts just really aren't even applicable. And so we help our clients to push back on those things when necessary and negotiate wherever we can. So that's a big part of our role. We're going to talk today about lots of different insurance coverages, not just medical professional liability, although it gets the bulk of our attention, arguably. I think first we should probably seek a little definition. We see two terms used quite a bit, telehealth versus telemedicine. And in seeking the American Telemedicine Association's definition, you see those there. For our purposes today, telehealth is kind of a broad term, and we'll think of it in terms of inclusive of telemedicine, but a lot of other things such as non-clinical services, education, training, could be, dietary recommendations, all kinds of things. Our focus today will be a bit more on telemedicine, and just to cut to the chase, we'll kind of define that for our purposes as those of you that have direct patient contact and are actually providing patient care via some form of telemedicine or telehealth platform. In talking about medical professional liability, it is what we would refer to as a signature line of coverage for the healthcare industry. And my background as an insurance broker is focused on the healthcare industry exclusively, and that makes me a bit unique. There are a lot of people in my business that are generalists, but I have an absolute focus on the healthcare industry. I work with hospitals, physician groups, all kinds of allied health providers, long-term care, and especially telemedicine. I've been working in this space for off and on for as much as 10 years, and very, very heavily for the last 2 to 3, as it's really taken off in a very exciting space. And I'm spending the bulk of my time in telemedicine right now. So our signature line of business, of course, is medical professional liability. That's our errors and omissions coverage in the providing of patient care. And there are a lot of different carriers that write this coverage, so there's good availability. But I will also tell you, not every carrier understands telemedicine. And there are a lot of what I would call shelf medical malpractice products out there that really don't do a good job of addressing the very unique exposures that we have in the telemedicine space. I will also tell you that a lot of my competitors really don't understand healthcare, and frankly, fewer still understand telemedicine. That's why we see so many very generic programs put together. I spend a lot of time auditing the programs that have been put in place by others, by potential clients that I'm interviewing with to potentially take over. Doing one this week, as a matter of fact, and it's one of the worst I've seen. It's got all these exclusions that I'm quite sure the client has no knowledge of, And it was because the broker in question really didn't understand this space. So we're going to talk about some of the things that we look for in putting together an ideal program. First of which, licensure. And that is the big issue. And I spent a lot of time talking about this with all of my telemedicine clients. And there's so many potential scenarios and what ifs that we can play over the licensure issue. For example, let's suppose that I'm seeking the assistance of a physician via telemedicine platform. I'm in my home state of Texas, but I'm in far, far West Texas. And I start out on an encounter with the physician utilizing my smartphone. And the provider knew I was in Texas and, as appropriate, partnered me with a physician that was duly licensed in Texas. And of course, I'm the passenger in the car because I would never be driving and talking on my cell phone, right? But as I'm having the encounter with a physician, we actually cross the boundary into the state of New Mexico. Then ultimately, we have a bad outcome. I have a bad reaction to one of the medications that was prescribed, and I seek the advice of counsel, who suggests that we actually sue the telemedicine provider. Okay, and so he says, you know, we can do it in one of two states, Larry. We can do it in Texas or New Mexico because part of your visit happened in that state. And guess what? New Mexico is far more plaintiff friendly than Texas is because they don't have tort reform. So we're going to file the suit there. Well, here's the challenge. Our physician that I started out with on the encounter is duly licensed in Texas, but not in New Mexico. And we're still in the fine print of that policy that nobody ever read. And let's face it, folks, when we buy insurance, we trust the person that sold it to us, right? They seem like a nice person. They use a lot of the right technical terms. So we assume they knew what they were doing. Most people don't read their insurance policies. They trust that the agent or broker that sold it to them knew what they were doing. But again, very few people really understand telemedicine. So very deep in this policy that provides protection to this telemedicine provider in question is an exclusion. And we routinely see this. The exclusion states that coverage is not provided for professional services provided where the practitioner is not licensed. Okay, so in our example where I crossed into New Mexico and this suit gets filed there, that provider has no coverage under their medical malpractice policy. And we see this all the time. I mentioned I was auditing a policy. Right now, for a potential client, they have that exclusion and probably don't know it. So it's a very, very big issue in telemedicine. In our mobile world, which makes telemedicine such a great tool, we find so many scenarios where this could be an issue. People crossing state boundaries while they're having the encounter. What about being on a boat on many of our rivers, like the Mississippi River, for example? What about on the Great Lakes? You can sit around and play what if all day long. And so many of our providers actually do a great job of trying to have physicians that are licensed in multiple states, although I don't know of anybody that has somebody licensed in all 50. Right? So it's a constant challenge. And that's utilizing the benefits of smartphones, right? What about those telemedicine providers that utilize the old technology, just the old traditional telephone, okay? I may be a Texas resident and present that to them at the time of the encounter, but I didn't bother to tell them that I was actually calling from a hotel room in New York, okay? So they put me with a Texas licensed physician. There are constantly issues that we're looking at on this. And again, so many of the insurance carriers have an exclusion over licensure. This could absolutely leave you without coverage. We're so concerned about this that I actually created within the last few weeks a special endorsement. It's an exclusive that we have and we copyrighted it, but we're going to start insisting on it for all of our telemedicine providers. And basically, it's an endorsement to the malpractice policy that states that as long as the physician or provider is licensed in their resident state, if they inadvertently provide care within a state where they're not licensed, coverage still applies. So we've got affirmative language. It's really, really important. And we're excited about this. We've already had a number of carriers agree to work with us on that endorsement and to utilize it on our mutual clients. So a really big issue on licensure. And guess what? Here's an even bigger one. International. A lot of my clients haven't really thought this through yet, but international telemedicine is coming. It's going to be a very, very big deal. People are hungry for the quality health care that we have here in the United States. We're very fortunate in that regard because not everybody has it so wonderful in other places. I know I travel internationally quite a bit. I go to the UK at least once a year. And frankly, I don't always want to fool with the national healthcare system over there if I need care. It's so much easier for my hotel room to connect with a doctor on demand or a teledoc or whoever it may be to basically get care. And so that's an international exposure right there with U.S. citizens traveling. We're also going to see exposure from expatriates, people that may be in the oil field or wherever in a venue where the medicine is not nearly as good, and they're going to have a real thirst for the quality medicine we have here in the United States. And then lastly, foreign nationals. As this is the World Wide Web, and the internet is everywhere. Just about everybody has a cell phone these days, so you're going to see an uptick in the number of encounters internationally. So this is a big deal. The question is, as your organization evolves and you see more opportunities internationally, can your policy respond? Most all medical malpractice policies have a provision as far as their territory where coverage applies anywhere in the world. But, and it's a very big but, the suit has to be brought in the United States, its possession, or territories. So that's a really big deal. And as you begin to see more and more international opportunities, that stipulation may become an issue. And I understand there are a number of countries, although I've never been able to get my hand on the list, that actually will grant U.S. licensed physicians privileges in those venues. If you're duly licensed here, they will allow you to practice there. So really important point. And you know, the big thing in there too is if your policy can't respond in the venue that you're in, that's going to be concerning. There are a few carriers out there, many of which are Lloyd's of London syndicates, that basically can provide coverage anywhere in the world and actually defend you in those jurisdictions. They have people on the ground, so if you're sued in Argentina, they can get you set up with a defense team in Argentina and help you defend the case in that venue. Likewise, if you're in the Central African Republic, the cultures of these countries can oftentimes be very different. For example, and this is a real scenario, there was a case that one of our Lloyd's of London syndicates called Beasley actually had to deal with. It was a bad outcome. It was a young teenage boy who'd gone into a surgery center, and the outcome was bad. The boy expired, and so the father made a demand for damages, but not dollar amounts like we think of here in the U.S., but rather the demand was for 20 camels. And so Beasley had to go out, determine the price of the camels in the Central African Republic, procure them, and then deliver them to the father to settle the case. Really bizarre, but it points out to the fact that we're going to be faced with these things as providers as we go internationally. Cultures and customs can be very different around the world. And so it's nice to have an insurance carrier that can defend you and represent you in these scenarios. Another big issue we're faced with right now, and I spent a lot of time with the Center for Telehealth and eHealth Law, there's a lot of concern by practitioners relative to some of the gray areas we're seeing from some of the states as far as the use of telemedicine. For example, some states are requiring at least some level of face-to-face encounter with the provider before telemedicine can be used. And that may or may not occur. And of course, the rules are changing constantly from state to state. Most of you are having to employ a great number of attorneys just to keep up with it. And it's such an evolving issue and changing day to day. Some of the rules seem to be written in pencil. They're changing them so often. So with these gray areas, such as having to have that face-to-face encounter, a lot of our practitioners were concerned that coverage may not apply if they haven't had that encounter. I mentioned the endorsement earlier that we've created. And what we did was in that endorsement also added a provision that if there was a law or statute in a given state that a physical exam or some kind of pre-existing patient relationship had to occur but did not, coverage would still apply. That way our clients don't have to worry about whether or not coverage would be there when they needed it, despite some of these quirky state rules. So we're good on this issue as well. Another thing that we've come up with and encountered, one of our clients has a number of teletherapists, psychologists that do telemedicine encounters. And they had pointed out to us they were aware that Dr. Phil, who's well known, does routine appearances, and that he had actually been sued by people in the audience for comments and advice he had given in this very public forum. And believe me, people, we have seen some really strange lawsuits out there. And you don't have to be right to sue somebody. We see all kinds of just crazy suits, and they're frivolous and fraudulent. But guess what? You still got to defend yourself. And so your medical malpractice policy does provide for defense, as well as the indemnification of the third party if necessary. So our client was very concerned about their therapist being sued because they were doing some of these kinds of appearances from time to time. And so we created a special endorsement and put it in their policy so that in the event that one of the viewers or the radio listeners actually brought action against them, that would also be covered. Again, these kind of things aren't necessarily anticipated or even thought through by the carriers. And there's not a specific exclusion for them, but that doesn't preclude them from hiding behind other language or issues to try to deny claims. So what we try very hard to do is to anticipate as many of these unique things as possible going into the relationship with the carrier and create endorsements to the policy that address some of these quirky and gray areas. And there are a lot of them in telemedicine. Which really points to the fact that you need somebody representing your interests that really understands the space. Some routine policy enhancements that we always seek, and this is whether you're in telemedicine or any other form of healthcare, whether you're a hospital, physician group, or whatever, there are certain things that we always look for in a medical malpractice policy. The first thing that I always look for is whether or not the policy features incident reporting. The reason for that is so many of the carriers out there still hide a little provision in their policy, which is written demand. What that means is in order for you to file a claim with them, you first have to receive a written demand for damages. That could be a letter from the plaintiff demanding a certain dollar amount, or it may actually be a physical lawsuit. But in any event, that's what is required to file a claim. Well, between the time an incident occurs and the time a demand for damages may be made is oftentimes months or even years. You know, with the statute of limitations being 2-3 years, depending on your state, or even longer in the case of a minor. Oftentimes, it's quite a period of time before you actually see the written demand. A lot of things can happen in between the time an event occurs, you know, the death of a patient, or one of the 7 deadly sins, or just a really bad outcome, and them actually suing. A lot of things can happen. Your insurance carrier may non-renew you for whatever reason. They may quadruple your premium, forcing you to seek alternatives. And the problem with all that is any new carrier is going to have an absolute exclusion for anything that you're aware of. So they're not going to pick up that claim. So you could very well be stuck with the old carrier, and that's assuming they keep you on board. in the time that it takes for a claim to actually develop between an occurrence date and the actual presentation of a lawsuit. That reason is why we always insist on incident reporting. It's the first thing I look for when I review a malpractice policy. I want my client to be able to present an incident as soon as they're aware of it. Okay, if there's a death, if there's a real problem, a paraplegic, whatever it may be, or even just a patient that threatens action, at the time that occurs, I want them to present that claim to their malpractice carrier. And with incident reporting language, that carrier has to accept that claim. Even if you change carriers a week later, even if they non-renew you thereafter, whatever, they own that claim. Okay? Really important provision. We look for that every time. And there are a lot of carriers out there that still trying to sneak the written demand language in there, particularly some of the physician companies. I see it very routinely, so that's something to watch for. There are also a number of things that we can negotiate for carriers to pick up, oftentimes at no additional premium. Frankly, you just have to ask. Good example of that is punitive damages. Those are legally insurable in a number of states, including my home state of Texas, and obviously only applicable in the event that you have damages that are awarded via trial. In most cases, don't go to trial, but when they do, if punitive damages are awarded, they can be huge, and you certainly want those things covered where they can be. Again, a very easy thing to negotiate for, and most carriers, when pushed, will throw that in. Another thing is sexual abuse or molestation. Routinely excluded. However, with a little negotiation, we can easily get that added. And believe me, there's a lot of issues there. We're seeing them all the time. And kind of funny though, people in telemedicine say to me, well, Larry, yeah, this telemedicine is not going to happen here. Wrong. It's just a matter of time. And since most telemedicine encounters aren't actually videoed, you don't really have the defense. It's just the physician or practitioner's word versus the patient. And believe me, people make all kinds of allegations, particularly when you're dealing in the teletherapy area. We may have some really problem folks that have issues and just make allegations for the sake of it. You've got to have defense. So the sexual abuse molestation coverage is really important. It's just a matter of time before we see more and more claims in this area, I believe. We've already got a patient, unfortunately, with one of our clients, and this is the patient now, who whenever a female physician comes on the video, he automatically disrobes. So, and calls from a different number every time, so they're still trying to track him down, but that's an issue, and you see all kinds of craziness out there, and you have to be prepared for it. So the sexual abuse molestation coverage is really, really important. Another issue that you look at with medical malpractice is how are coverage limits going to apply. There's really two approaches to that. You could have an individual limit on each of your physicians or therapists or practitioners, as well as your corporate organization. Or, and what we usually do, is have shared limits. And this makes a lot of sense because it precludes you having what we call a clash loss. Clash loss would occur when, say, you had a couple of physicians that touched a given patient at different points in time, as well as a corporate entity having their own limits, and then a suit is brought, and they're going to bring action against all of those individuals and the corporation. So you've got multiple sets of limits on the table for the benefit of the plaintiff. And we really want to limit that wherever possible. So what we do is to have all of our physicians, all of our practitioners, as well as all the corporate entities share in one set of limits. And then we can build those limits up as necessary, depending on what your specialty is, the geography that you're practicing in, and make that appropriate. But that way we preclude what's known as the clash loss. Really important. Another question we often get is how's the policy rated? What we generally do is a per patient encounter rating. Depending on what your specialty is and the state you're practicing in, a rate per patient visit or encounter is established by the carrier. And so your premium is basically your projected number of encounters times that rate. and it's always difficult to project how many encounters you're going to have. All we can do is an educated guess. So we often put an audit feature on the policy. What that does is, for example, you think you're going to have 100,000 visits for a given year, and you only have 80, you certainly don't want to be paying for visits that you never had. So then you would have a credit with that carrier of the 20,000 visits that did not occur. Likewise, if you underproject and you actually do 120,000 visits that year, the audit feature would allow for the true up, and then the additional premium would be due in that instance. But that way it does protect both you and the carrier so that you're paying based on the visits that actually occurred. Kind of moving around to some of the other coverages, we spend so much time talking about medical malpractice, and that's absolutely appropriate. However, we also need to spend some time on the technology world because it's really evolving. And I'm sure you're certainly hearing a lot about the various breaches and all the issues associated with that. With telemedicine companies, we really looked at two pieces of that puzzle. First off, and frankly, I don't see this in most of the accounts that I audit going in. It seems to be an overlooked exposure in many instances, but it's technology errors and omissions. If a patient brings action against you, that's where you look to your medical malpractice coverage. But you all, as an industry, are signing a lot of contracts with other third parties that are of a non-patient nature. For example, many of you are signing up contracts with various healthcare systems to be the exclusive or participating telemedicine provider with that particular system. You may be signing up physicians or other practitioners on a third-party basis to provide coverage, okay? So any of these individuals could theoretically bring action against you and your organization in the event that your technology, your platform fails somehow. Example, if that healthcare system you contracted with, if your system failed for a period of time, hours, days, even weeks, and frankly cost them money or presented them some kind of financial damage, they may bring action against you. Likewise, those physicians or other providers that are on a contract basis, if they can't practice, can't earn an income, they may bring action against you as well. So technology errors and omissions is a really important coverage. There's also some possibilities where your platform, if it's integrated in with the IT system of another third party and cause some kind of damage there, you certainly want protection for those kinds of allegations. And remember, folks, again, you don't have to be wrong to get sued. All of these policies provide a defense as well as the indemnification. And the defense is often some of the most costly part of the whole claim process. When we do technology errors and omissions, it's usually coupled on the same policy form with a really important coverage that you hopefully heard a lot about. If you haven't, take heed today. That's cyber liability. And frankly, a better name for cyber liability is really privacy liability, because it doesn't necessarily have to be over the internet or web-based to be a claim. It still could be an old-fashioned paper file or x-ray or whatever to have a breach. But that's what this coverage does. It provides protection to you in the event of a breach. And limits are a very, very big deal here. Most people are surprised to find out that healthcare is the #1 target. It is 10 times more likely to have a breach than other industry groups, which is surprising to a lot of people, and you ask why. The reason is that most of the credit card companies and us as consumers have become very, very keenly aware of breaches and fraudulent charges. They spend inordinate amounts of money fighting this. We as consumers spend more time reading our bill every month, making sure there are no charges on there that shouldn't be. So everybody's very attuned to it. What we're not as attuned to are people filing fake health insurance claims. The carriers aren't as good at fighting that as the credit card companies, so they're more apt to get those through. We don't pay as much attention to our explanation of benefit forms as we should, and so it's very likely that there could be fraudulent health insurance claims filed under your name. All they have to have is some information on you plus a provider's number, and they can be filing these claims. That's why the health information is so much more valuable in the black market. And it takes much, much longer to be discovered. Where a credit card fraudulent charge may show up and be disputed within days or hours even, a lot of times these health insurance claims aren't caught for months or even years. So because of that, they have so much more value in the black market. And Poneman, which is an independent study group, did a study released in 2015, and they've come out and said that the cost of a breach for a healthcare organization is as much as $363 per patient record. Think about that for a second. There are plenty of healthcare organizations that have tens, even hundreds of thousands of patient records, some even in the millions. You can do the math. It's a big, big number. And what we have seen as far as people buying cyber or privacy liability, initially there was an aversion to it, and particularly with the IT departments. They took it a bit personally. I cannot tell you how many times I heard, we can never be breached. We've got all these fail safes, we've got firewalls, it could never, ever happen to us. You know what? That's exactly what the people at Target said, and Neiman's, and the list just goes on and on and on. So nobody is fail-proof in this instance, and the cost of a breach is huge. So limits are a big deal, and initially everybody resisted purchasing this coverage at all. Then sort of the second phase of this whole process was after some pressure from the board of directors who read all these stories about breaches in the Wall Street Journal, well, then risk managers started to push a little bit and say, okay, I guess we ought to look at this. And so they'd go out and buy a policy with maybe limits of $1 million. As you'll start to figure out, that doesn't go very far in a breach, particularly if that number of $363 per patient record is anywhere near correct. Excuse me. Cyber liability policy is actually broken into two parts as we look at it. There's what we call first-party exposure, and then third-party. The first-party exposures are those things that you're going to be responsible for in the event that you have a breach. And the policy, a good policy, should respond to each of these for you. The first of which is forensics. The first thing that you have to do once you've figured out that you might have a breach is engage a forensics firm. Their job is to come in and determine, okay, how did the breach occur? Where did it originate? How many of our patients have been compromised? It's a very, very costly, time-consuming process, and believe me, these people do not come cheap. So your parties should respond and provide you reimbursement for the forensics process. Throughout the entire breach, you're going to need legal advisory, as you might expect. They've got to advise you on such things as notice, because you're going to have to provide notice to any patient that may have been had their data compromised. And there's a certain format for that that varies from state to state. And then you'll have to offer them credit monitoring, and of course pay for it yourself. And a good policy will respond to all of these things. Lastly, you may actually experience a business interruption. You may have to shut down your operations for a period of days or even weeks to basically right the ship and establish the origination of the breach and put up protection against future breaches. So that could have you shut down. You certainly would have a lost revenue and therefore lost profits. So a good policy is going to respond to that as well. And then, of course, after all of that, you still may have some of the affected patients or third parties bring action against you. So that's where your third party exposure lies. So you're going to need defense for that, as well as potential indemnification to those third parties for any damages. So it's a long list, and again, it doesn't take long to basically exhaust $1 million limit. So look very, very carefully at your privacy cyber liability coverage. That's an exposure that needs to be reviewed every year. And the first thing that you should be asking yourselves, the first thing I'm going to ask you is, how many patient records do you have in your system? Not just current patients, but old ones as far as you go back. because it could all be compromised. Next area I want to talk about is one that you may not have heard anything about, and it's a big one. I spent a lot of time talking about this, and that being reputational risk. Most people have no idea that this is an insurable exposure, but I'm sure you can appreciate that it's real and it exists as a potential hazard for you. There are so many great examples in recent years. The one I often point to is the poor folks at Carnival Cruise Line. You may recall the ship that got stranded in the Gulf of Mexico because of originally a fire that happened in the galley. Well, of course, that's an insurable exposure, the fire itself and any damage that it caused. But what was far worse for Carnival was the horrible media attention they got as a result. You may recall the ship being stranded, the fire caused enough damage that the passengers on board had no fresh water, their toilets didn't work, no ability to shower, their air conditioning system was out, no fresh food. It was just a mess. And of course, they were oftentimes outside on the highest deck, and many of them took sheets and made signs, help us, and all kinds of things for the helicopters that were flying above, taking video to report back on the news. So the exposure that Carnival got was huge, and it certainly wasn't positive. It had a huge impact on them, but not only on them, also on the other cruise lines. And there's so many other great examples of companies that have been really affected. Heard about Bluebell Ice Cream and their listeria problems. Look what Jerry Sandusky did for Penn State. The family violence issues the National Football League has had to deal with. And yes, it happens in healthcare too. Here in my home state, Texas Health Resources, you may recall a couple of years ago, the Ebola case, with a patient presented after having been over in Africa and presented there. Huge impact to that organization. People didn't want to go there to have their babies, to have their elective surgeries. Even emergency room visits suffered because people in the ambulances were like, take me anywhere but there. So they really suffered as a result of that for a good period of time. Matter of fact, even a little former client of mine, a little urgent care facility in Texas, also suffered through that. They had one of the first responders that had transported the Ebola patient to the hospital show up a few days later with flu-like symptoms. So everybody assumed the worst, when in fact he merely had the flu, but nobody wanted to go to their urgent care facility. So it really impacted them. Point here is that it only takes a little event, sometimes way beyond your control, that can really bring down an organization. As we think about telemedicine, the acts of a single physician or practitioner could really impact your organization and, frankly, the whole industry. Matter of fact, I had breakfast just last week. Now, many of you may know Renee Quashie, a very well-known attorney with a law firm of Cozen O'Connor in Washington, D.C. I've kind of nicknamed him the godfather of telemedicine because he's been so involved in the creation and the legal work for so many of you. Great gentleman, very, very knowledgeable. And as we had breakfast, we were kind of talking about the future of telemedicine, where it's going, how we can be prepared to be ahead of it. And he brought up to me, he said, Larry, my biggest concern about the industry is just one little event. Could be a malpractice case that's just really ugly and gets everybody's attention. Could be a rogue physician or practitioner. Could be a lot of things. Where is the help there? And then I shared with him, of course, about reputational risk insurance. It is available. It's not widely available. It is available. There are a couple of Lloyd's of London syndicates that do write this coverage. It is generally very bespoke or tailor-made in nature for a given client. What they do is to look back in time at your preceding 2-3 years revenue and profits and put together a program very specific for you. And you also write the policy language that's very tailor-made just to the exposures that you're concerned about. For example, the actions of an employee, an industry event with a competitor that still may have impact on you. Whatever concerns you have, you can write that into the policy, and basically it will provide indemnification for lost profits for a period of as much as 24 months post-event. And really very strong coverage. There aren't a ton of those policies issued, but they're growing as far as the number. And that's something that I really think the industry ought to take a hard look at, because we're in our infancy here. I saw a projection just yesterday that over a period from 2013 to 2018, telemedicine is going to grow at a rate of 19,000%, beginning at an average of around 350 encounters in 2013 to a projected 7 million in 2018. That is exciting growth. And with that comes some vulnerability. Again, one really ugly event could put the industry in somewhat of a jeopardy situation. So we want to certainly be looking at those kinds of things. And just to wrap up, this last slide kind of touches on some coverages that, frankly, any business needs. This should be part of every company's portfolio, whether you're in telemedicine or some other venture. These would be things including general liability, which is your sort of core and standard third-party liability coverage for protection against allegations of bodily injury or property damage, property to protect your own bricks and mortar or any kind of business personal property that you may have, IT equipment, whatever, automobile liability, workers' compensation to protect your employees for work-related illness or injury, umbrella liability, directors and officers to protect your leadership team while serving in that capacity, employment practices liability, which provides protection to you for allegations of wrongful termination, harassment, or discrimination, fiduciary liability for those of you that have an ERISA-related health and welfare plan or any kind of qualified retirement program. You have that fiduciary responsibility there and certainly potential liability. And lastly, crime insurance. And these things, along with the aforementioned coverage areas of medical malpractice, technology, along with privacy, cyber liability, and potentially reputational risk, would round out the ideal portfolio for most telemedicine companies. So many of you will have questions, and I'm certainly delighted to answer them today, but I'll also share with you my contact details here, my email address, Larry_Hansard@ajg.com, my phone number, and happy to visit with you one-on-one if you wish. But for those of you that have questions today, I think we can go ahead and address those now, Becky.
There we go. Yeah. Thank you very much, Larry. You brought up a lot of topics that I hadn't even thought about before, and some of the areas I want to take a chance to ask you some questions as well. So as a reminder for our audience today, if you go under across your screen right now, probably you want to go up to the top of your screen, hover over where it says Q&A, and you can ask your questions there. So while you're thinking about your questions, I'm just going to go ahead and advance to this last slide here. There is one change for our April Telehealth Resource Center webinar. We're going to move that from Thursday, April 20th back to April 27th. There's some scheduling conflicts with that and bumping up against ATA there. We're actually going to have some students from the Boston University School of Public Health. They're going to be talking about engaging providers with telehealth technology. So that should be an interesting topic. So our questions, let me go ahead and put this back to, we'll go to our survey in a minute. Let me go back to there in case you need to get a hold of Larry. How can we access Larry's slide set? If you actually registered for today's webinar, I have a copy of your email address and I will send out a copy of the slides. I'll fix that last slide before I send that out. Let's see, isn't general malpractice insurance cover telemedicine?
Good question, and thank you. Is it derived? Appreciate you asking that. As I mentioned earlier, telemedicine would certainly be covered by your standard medical malpractice policy. The problem is, unless you really specifically address some of the issues that I talked about, such as the licensure issue, the policy may not be as strong and may leave you wanting in the end. So while telemedicine activities are not in any way excluded by your standard malpractice policy, some of the provisions may prove problematic in the end. My advice to anybody that's participating in telemedicine, maybe you're a part of a larger organization that's very diverse and has other exposures as well, make sure that you've communicated that exposure to your carrier and that it is contemplated and addressed in your policy.
Okay, and then the other part of Daria's question, advised patient over telephone, some ways like advised, I'm not sure what they mean by that. There's another.
Yeah, which question are we on here? Which question?
The other part of Daria's question was, I'm going to go ahead and I think he's got another one here. Add-on coverage. Oh, so is the general malpractice taken by a family or primary care, or is it separate new insurance? I think you answered that. Does that make sense to you, Larry?
Yeah, okay. The next question I have is, I've asked about this insurance for our institution. I've been told telemedicine is covered. How do I get their attention to look into this farther? Frankly, the way that I address that is when we're dealing with a healthcare provider that may be involved in telemedicine, and everybody always tells me, oh, we've got great insurance, it's all perfect and all that. And then I'll sometimes challenge them and basically say, okay, great, let us do an audit. You know, frankly, it's kind of like getting the second opinion from a physician, if you will. And rare is the day that I don't find at least some major issues that need to be addressed. So to answer your question, the best thing to do is to have their program reviewed by a second set of eyes and somebody that really knows the telemedicine space. And I'll bet you find some surprises there. Next question I've got is, will lack of bandwidth infrastructure in remote rural areas where telemedicine may be most needed impede this care tool? That's a big question, frankly, that goes well beyond insurance. But you know, frankly, a good program is going to cover you regardless of geography within the states. Because we did talk about the licensure issue earlier, and then down the road, as this thing really takes off, you know, the international exposure is big as well. Next question I have is, telemedicine insurance or malpractice insurance and add-on coverage, rider to general malpractice insurance. Basically, it's not an add-on. It's just part of the core malpractice insurance policy. But again, just the standard malpractice policy that's sold routinely oftentimes leaves issues unresolved, like the licensure issue. So again, I would say that you need someone who really knows this space to look at the policy that you have and make sure it is as comprehensive as possible. But telemedicine is not an add-on. It's just an exposure that needs to be contemplated and properly addressed with your core malpractice policy. How can Gallagher healthcare clients receive a copy of the extension endorsements mentioned in your talk? Contact me directly and be happy to share. Are there any limitations for coverage for businesses smaller companies under 100,000 revenue? Any comments for startup companies less than 1 year? You know, frankly, we work with all size risk. Many of the telemedicine companies that we are dealing with right now are at startup. Many of them even are pre-revenue and just in the funding stages, but they're getting their coverage in place. So we work with all sizes and create a program that's appropriate, that's going to take them through the long haul.
Great, thank you. So I'm going to go ahead and jump in here with my questions since we've answered all of the audiences real quick. And I wanted to go back to this slide on fiduciary liability. I've actually had some questions from a state that has parity law, that the claim was not paid, and come to find out that the patient was covered by a self-funded insurance program which follows ERISA law. So how, from a provider standpoint, how am I going to know who those self-funded programs are out there, and if my patient comes from one of those?
Ooh, okay, that's the gotcha question of the day. Because, and I'm not a benefits person, first off, and that's really kind of a benefits question. Our business is really sort of segregated into property and casualty and employee benefits. And I have a whole set of counterparts here at Gallagher, as most brokers do, that focus on the employee benefits side. I do know from experience that that would be a very hard thing to tell, because even though there may be self-funded, they may still have United Healthcare paying their claims, and their ID card may show United Healthcare. So you're not going to be privy to that information. And so, I don't know. I honestly don't know.
Fair enough.
I can talk to one of my benefits buddies and get back to you, Becky, but
Okay.
That's a good one.
All right. Okay, so any other questions out there? I'm going to go ahead, and we do have, whoops, I'm going to take this link here and paste it into our chat feature, especially because we are a federally funded program. It's always important for us to collect comments, and would love for everybody to respond to this survey. It's a real short, just a few questions survey, and those answers will help us to continue to bring you relevant information in our webinar series. If there aren't any other questions, I would like to thank everyone for joining us today. And Larry, thank you so much. This is becoming an ever-increasing area that those of us in the telehealth arena need to pay attention to.
Absolutely. My pleasure. Enjoyed being with you all. Have a great day.
Thanks, everyone.